any sort of these aren't really structured at all. It's more so for new traders to come in, ask questions about either whether it's premium side of the chat, any sort of questions trading related. It could be about me. It could be struggles you're having. It could be about trading psychology. It could be about anything you want. Towards the end, I typically will chart a little bit, go over some trades for, tomorrow. Let's see what I'm looking at, and then, yeah, that's about it. Sounds good, Duco. You're good. Mary G, how are you? Onstead, what's up? KSI, Isaiah, Christine, Just Jen, Shin, Ooft. How we doing? For anyone that doesn't know how to type in the chat, if you just kind of put your cursor over the free live stream voice channel you just clicked on, there should be a little like chat bubble you can click on, and then that's where you can type, and I can see what you are asking. But yeah, today's trade was awesome. For any of y'all that missed it, it was on a free live stream too. So you probably could have paid for a monthly subscription with this. My first entry was kind of right here. Let's see if I can make that arrow bigger here. So I'll make them white too. That's not a very big arrow. I don't know why it's not. I mean, you're telling me that's an extra large arrow? That's terrible. Here, I'll draw it like this. So entry was right here. And I sold some of my position here. And I sold the rest of my position right here at the low of the day. So I got a pretty awesome sell on that as well at the end. Does anyone have any questions on why I took this trade and how I came up with this trade? I can go through kind of the thought process. Also, if you are on the premium side of things, that's where I send a watch list. And this was what I wrote. Very brief, but if you look at this, this was part of my watch list this morning. I had three trade ideas on that. Here, I'll send it in here for the Discord. So this is kind of what I sent in the morning. I can click on that and read through that. And then obviously this is the intraday price action that I traded. So yeah, I'll go over this trade. So pretty much you can see in that screenshot though I sent you guys on Discord kind of what the chart looked like before and now what it looks like. So obviously like that part of it was not there. The chart looked like this. So I mean, pretty much, this wasn't some sort of A+ setup I was looking for. And again, I said that this like the price action this morning was just really solid. Entry was great. Exit was great too. And the speed of the move helped with the amount that the contracts gained value. So pretty much Amazon's obviously been really weak overall, right? So typically when I chart, I'll go on a daily chart here. This has been super weak. I mean, there's just, unless I'm looking for a longer term buy where I'm buying and holding for maybe a couple weeks or a month or 2 months, I don't have a lot of interest in the upside on this, right? Unless there's some positive news or something like that. Amazon was also kind of gapping down pre-market from where we closed on Friday, right? Or sorry, when we closed on Monday. So we closed up here at 196 and we opened up down here just above 192. So, I mean, that's a pretty like weak open. Market was kind of weak. Next thing I was looking at is, we have a little uptrend here. We have kind of more of a bear flag, right? So we have a low down in here. What is this? 1, 2, 3, 4, 5, 6 days ago. Have a kind of another low that came in here just at 192. And then yesterday's low is right around here at 194, 195. So that creates an uptrend, right? Because we have, a higher low, higher low, higher low. That's where that orange line comes into play. And so basically what I'm looking for is, and this is what a bear flag looks like, guys. So if you go and Google bear flag, you can see that this is kind of what I'm looking for. So when we break this uptrend, that's going to signify that we're now going to make a lower low, which is now going to, be breaking this tiny uptrend we have. And let's say that I'm a buyer, right? And I'm trying to buy this up, making this go higher, right? Making this make higher lows. If a higher low gets taken out and the uptrend is broken, that's the first sign that sellers are now back in control and this could go lower. So if I'm a buyer, what am I doing? Well, I'm stopping out, right? So I'm selling, along with people like me coming in and wanting this to go lower. So what am I looking for then? Well, the first level I'm looking for is 192 because the low over here on March the 13th was 191.82. So I had that marked out. Let me just look at pre-market low here again. I think we are already, so we already broke pre-market lows coming into the open. So 192 is my first level I'm looking at. The next level I'm going to be looking at under that is going to be the lows over here, back in this first bubble at 190. That's the last spot that we bounced, and we haven't gone lower than that since then. So I know that if selling pressure can come in, and we can see some aggressive selling, and this can kind of start moving to the downside fast. If we break 192, the next level of support is going to be 190. 190 is also kind of a round whole number, right? 191 is a lot different than 190. 191 is different than 190, right? Because 190 is kind of a $10 level. So I'm looking on level 2, and I'm saying, okay, we got about 150,000 shares looking to get executed at 190. So that's going to bring in some volume, and that's going to create a faster move. Think about that as demand, right? Think about that amount of shares looking to get executed at 190. So if we can come down there and there's enough people selling, and all those shares trying to get executed there get executed, well, that means all the demand isn't gone. So that is why on a 1-minute chart, I look at this and I go, okay, so a break of 192 could kind of be my entry, but we opened up just above 192 and broke straight down. I'm like, okay, so I'm not going to chase on the first minute of the day. Relief bounce, low volume, could not break the high of the day. Rolled back over, started to see some weakness, markets falling. Started entering here right before, because I want to be in right before this low of the day, because I'm going to break at the low of the day. This is the kind of action that I want to see. However, I entered and it just went flat. My stop loss was kind of up here like 198, 191 and 80 cents. And then, 192. If we get back above 192, I would have gotten out. Also, this yellow line here is VWAP. I use that as stop loss a lot of the times as well. So if we got up above that, I knew that this trade wouldn't work. So I'm risking. So if I got in around here, 191.50, I'm risking about 50 cents. I'm also thinking that if this works the right way, I could pick up $1.50, maybe a $2 move. So that's a 1 to 4 risk to reward. That's exactly how I would want to be, on the risk side of things. That's where I want to be positioned, right? I'm risking 50 cents, but I'm looking for $1.50 to $2 move. So got in here, stop loss never hit, right? Stuck to the stop loss. Once it rolled back over, once we broke this low of the day, right? And the low of the day here is going to be right over here at 191. We tested it there, came back over. Once we broke the low of the day at this area, that was perfect, right? And look at volume on the bottom of my screen. Volume spiked as well. That's another, that signifies that I'm looking at the right thing. If I break this and volume spikes, I know that there was a lot of other traders. There's a lot more money looking at this, and I'm in the right direction, because on this candle here, we had almost 800,000 shares get traded within that 1 minute of time. So let me just do the math here for y'all, so y'all can understand how much money that is. 800,000 shares times $191 roughly is $152.8 million. Okay. So just to put into perspective how much money is in play here. So perfect volume started spiking, broke straight through low of the day, and then this is accelerated. Why does this happen? Well, there's people like me wanting to short the stock, wanting it to go down. There's also people that have been buying it up, trying to bounce this. On the low of the day break, they stop out as well, and they sell the stock as well. Okay, so they're also selling along with people selling stock to short it to make money on the way down. So that's where a bunch of sell volume comes in and the stock just drops quickly. And that is the kind of trade that I pick up. So you got to think, Even if I got in here and it broke, that would have been a 2-minute trade. I sat in it for about 5 minutes, broke down my, I took advantage of this 2-minute move and I got out. That's how I trade, very quick, but I'm looking for these high probable moves with good risk to reward. I use options to kind of lever that money. So, I made 30, 40% gain on whatever I put into this trade. So on the original break, I typically sell a little bit, and then I just kind of scale out to try to get as much of that trade as I can. The 190 break was just kind of my target. Sold, got out of everything, and then it bounced and never went lower for that day. Are there any questions on that? I know that was kind of a lot, but I hope that made sense to y'all. I try to kind of walk you through all the thought process there. So one last thing I want to talk about is I talk about how people buying this would be getting out. Their stop loss is going to be down here, so they're also going to be selling. And I'm talking about this on a 1 minute, but these exact same principles are happening on a bigger time frame as well, right? So just like this, when we have a low here, break through, if I'm a buyer and I see these lows get taken out, I'm also stopping out and I'm selling. These lows get taken out, I'm also stopping out and selling. So just like on a 1 minute, the same thing happened. And then once you get the 190 break, this just kind of dropped so much, especially from, closing at around 196 on Monday. That's just kind of when buyers came back in, bounced it up, and it just kind of chopped around and slowly got back higher on the day. So can I get a thumbs up or a yes that all that makes sense? And if you have questions, please ask, because this is a very common trade for me, especially on the downside. And, there's a lot of the times where I take trades that look just like this, but upside down to the upside, right? Make a high, kind of test that high. Once we break through that high of the day, I want to see it go higher, right? That's kind of a breakout, right? So this is a breakdown. I also trade breakout. This is like, I would say 90% of the kind of trades that I take intraday. Dave Coffin on YouTube. Sweet. I love that. You need to get in the Discord, my friend. Yeah, opening range break. So, this would be the opening range. We didn't break the initial opening range, kind of trickled back down. Once we did break this opening range, that was it. That is how I trade 90% of the time. And it's extremely consistent. It can be extremely profitable if you are very disciplined about your entries and your exits. You don't try to take too much. You don't try to get too greedy. And, you can make a living by catching 2 to 5 minute moves on stocks. And that's exactly how I do it. So any questions on that? Scott, I see you typing. You can take your time. YouTube and X, y'all can ask questions as well. And I really didn't go in with a bunch of money, guys. I think I had, maybe 6 contracts at, I don't know, roughly $250 a piece. So that's a little over, $1,000, $1,200, $1,300, whatever it is. And, make 30, 40% on that. I think I pulled out almost $500. Oh, nice, Dave. Cool. Sorry, didn't recognize your name. My question would be, how do you see where your entry is? I would make some trades at the end of the week. Yeah, so I want to try to anticipate the entry just a little bit. So could I have started entering up here when it started rejecting? Sure, but that's just not a very safe entry, and typically you could get just caught in a losing trade, just kind of being a little too early. So that's why I entered just right before this original low of the day at 191. Okay. Obviously it went flat here for a little bit and then broke. But so to kind of answer that question, like the entry, I want to be in right before the break, right? So if the low of the day is 191, I want to be in around 191.20, 191.30, 191.40. Okay, just a couple cents before. And some breakout traders, they wait for the break and the close of the candle. So that's also why, we got the break, we got the close of the candle here. We broke the low of the day and closed. that also helps speed this up as well. The only reason that I try to get in early is because there are some occasions where it'll break and then instantly bounce back up, right? It's kind of a fake out when, the trade doesn't follow through very well. And if I get in after the break, I'm paying, the contracts have already gained, maybe 10, 15, 20% on the break. I enter and then I get caught in a fake out. Well, then I can instantly lose 20%. And then, if I'm sticking to my other stop loss here, well, that could be a 30, 40% stop loss. So I want to be in before. So if it does do that, well, I have an entry above. So if, I may be up 10, 15% on the break. It kind of fakes me out, rejects and bounces back up against me. Well, my entry is up there higher. So then if it kind of goes past my entry, I'm losing a lot less than I would if I just kind of was a little late to the party. There are times I can take early entries and add to it and, that kind of stuff. But typically I want my entry to be just before the break, for that reason, in case there's a fake out. How did you know to enter before the break and not after? So I think I kind of just answered that. Some people do enter after the break. I just, again, I like to just try to predict it just a little bit. And again, I've traded this exact same way for a very long time, and I've traded these exact same stocks for a very long time. So I just kind of know from experience, like right before something could happen, and I want to be in then. I don't want to be in when the masses are in. I want to try to predict things a little bit earlier, just so I can get a little bit better risk to reward on that as well. How do you keep your patience when it starts going in the other direction as a fake out? Well, patience just means I'm sticking to my stop loss and my profit targets. If we broke and bounced back up and started kind of holding above that level, I want to see it break down past. And I see I'm watching futures, right? So I'm watching the NASDAQ and the S&P 500, seeing how those are moving compared to my stock, right? Because Amazon is in both of those. So if futures are bouncing and I'm starting to see buying pressure on the future side of things, well, that may also mean that Amazon might bounce as well. So that could be a reason why I get out. Does that make sense? So, you got to try to be patient no matter what. And if you feel antsy and you feel kind of, nervous in a scenario like this, that just, to me, that means you're in with too much size, because you should never be too attached to your P&L. You should be more focused on what the stock is doing, right? If you're making decisions based on your P&L and not what the actual chart is telling you, then you're just size too heavy. And you're not going to be able to make logical decisions because you're just sitting there focused on how much you're up or down, right? What's up, Mr. Farouk? How are you, my man? Any other questions on that? Yeah, good to see you. Yeah, Powell's going to be interesting tomorrow. Does everyone understand what FOMC is and who Jerome Powell is? Yeah, Farouk's be trading by. He's typically at 2 p.m. Eastern time. Let me double check that real quick. But yeah, I'll explain. I probably should. Yeah, he's at 2 p.m. Eastern time. That is when the announcement is made. That basically meaning if interest rates are going to go up, stay flat, or come down. And then 30 minutes later, that's when Jerome Powell starts talking, right? And so that's the head of the Federal Reserve. What are your thoughts on market of tomorrow, up or down? And then after FOMC, where will we be? Christine, I wish I had that answer. And anyone that you ask in the trading community that's going to tell you where the market's going to be the next day and what's going to happen after Jerome Powell or the FOMC announcement, yeah, they're lying to you, because nobody knows. The best traders in the world that I've ever been around, guys that have been doing it for 40 years, new traders will ask them that question. Well, where do you think the market's going to open tomorrow? He'll say, I don't know. Whenever I would intern at the trading firm, one of the first things that he would do with interns is say, what's the most important part of trading? And everyone would say discipline or stop loss or, risk management. He's like, yeah, those are all good things. But the most important thing about trading is that you don't know anything at all. So don't act like you do. Okay? Because when you start acting like you know what the market's going to do, that's when you're not going to be making the right decisions, because no one does. Your job is to react. We're professional decision makers. We are not time travelers. And my job is to try to find high probable trades, things that I have seen many, many, many times before. And I want to have safe entries and safe exits. I don't want to be greedy. I don't want to be scared. But as long as I stick to my rules and my risk management, I know that I'm going to be okay. Would it be smart to buy a strangle option before Powell speaks? I mean, you could try to do that, but typically, most new traders, they want to try to be involved in stuff like the FOMC announcement. They want to try to be involved in CPI, or earnings and stuff, simply because they have this subconscious want to try to catch a big move in the market. And the longer you do this and the longer you trade and the more traders you meet, and the better traders that you're around, those guys are actually not involved in it. Because in reality, especially in the world of trading that we're in now with the amount of technology that we have, all of the trading, I would say 99% of the trading that's going on during the FOMC announcement, when you're seeing the market rip up, rip down, sideways, whatever, it's all just algos. It's all computers trading it. It's high frequency traders doing their thing. It's not even humans trading it. So you don't want to be involved in that. Early on in my career, I would do the same thing. Earnings swings, FOMC strangles, CPI strangles, whatever it is. And sorry, at the end of the day, your consistency is just never going to be there. You're at the end of the day, just over time, you're not going to make money doing that. What's up, Latvian? Yeah, Nancy and the people in Congress or whatever, that they have the inside scoop, but we do not. So our job is to not try to act like we do. Our job is to watch the charts and make educated decisions on what we think is going to happen. And no trader's perfect. There's a quote in trading that the best loser wins, meaning that if you can use risk management the best way, you can stick to your stop losses and you can lose the right way. Finding winning trades is very doable. And sometimes it's very easy to do. But dealing with losing trades and just, the human psychology and the ego and the emotions involved is what causes people to take really big losses, blow up accounts, stuff like that. And that's what's going to get you out of the game, right? The longer you survive in this and the longer you can just stick to your risk management plans, the easier it's going to be for you. If you can learn how to lose the right way, that's how you're going to win, because losing is inevitable in this. Everybody takes red trades. So as long as your red trades are smaller than your winners, and you can win more than you lose, well, you have now found a way to print money out of thin air for the rest of your life, no matter where you are in the world. There's nothing better than this in my eyes to be good at. You can be anywhere you want. There's no salary cap. You can make as much money as you possibly can. But if you come into the mindset of, even me, right? I mean, guys, I started when I was 15 years old. So, of course, I thought I'm going to be rich, when I'm 16. I'm not going to go to college. I'm going to make all the money in the world. And that attitude is what made things really hard in the beginning, because all you wanted to do is make as much as you can. Yeah, exactly. When's the Lambo? That's what made it so hard, is because I would be consistent for 2-3 months. I'd build my account beautifully, right? I was doing everything right. And then maybe there's 1 week where I'm sick or I don't feel good or didn't sleep good or whatever it is. There's some A+ setup that I think is going to happen the next day. I take that trade, and even if it was a good setup, maybe I just went in with, more than half my account or just something just outlandish, trying to catch a massive home run trade. And that trade, even though, like I said, it could have been a really good setup, turns into a losing trade. Well, then I'm in with a really big amount of size that I'm not typically used to. And maybe I start averaging down. I don't take my stop loss where I'm supposed to be. And it just goes against me and takes months and months and months of profits away in one day. And it's devastating and it's really hard. And I did it many, many, many times. And I think a lot of you have probably done that as well, especially if you got maybe a year or two under your belt. It sucks, but that kind of stuff will make you a better trader if you can, fix it. The whole part of becoming a good trader is by fixing mistakes and narrowing down what you're good at. In the beginning, you don't know what you're doing. It's like learning a new language, right? You have no idea what you're looking at. There's terminology you don't know. There's, strategies you don't know, and you're just trying to find one that makes sense to you. The big reason why we started doing this coaching stuff is to really try to just narrow you down somewhat into a strategy that, it works for some people, and you could actually spend time just focusing on that. Because, I mean, believe me, guys, I've made every mistake that you have. I've tried swing trading. I've tried penny stock scanning and, all this crazy stuff. Once I kind of found something that made sense to me, I slowly started realizing, well, I win and I make money doing this type of trading, but I lose doing that. So I'm just going to just completely stop doing that. And now I'm trading 3 different ways. I'd take another one out, right? Getting really good at this is really just narrowing down problems and getting to just a very niche style that you do that makes sense to you. And once you can do that consistently and you found a way to consistently make money while also managing risk, you've won. Yeah, we've all done that. Yeah, the freedom of doing this, sad doctor, it's incredible. I've been able to trade in different countries. I've traded on a boat. I've even traded on a plane before. Which I don't recommend because obviously internet's terrible in the sky. But there's nothing in the world like it. And the more work you put in, and the more consistent and disciplined you force yourself to be, the faster you're going to get to that point where you can really do this. Yeah, Breckle, 100%. And like I don't necessarily hedge, right? I never really hedge a position. My hedge is just having really tight stop losses because I know I can always get back in that trade. And I mean, guys, there's so many things that I used to do. I've told the story, especially to you regulars, you've heard it, but I would do things like I would put a big green line on my screen where my profit target was, and I put a big red line on my screen and set an alert so it dings on my speakers where my stop loss needs to be. Doing little things like that will help you just subconsciously do the right thing over and over and over again until I just realized, well, why have I not been doing this in the past? There's no reason that I should not be doing this. It's so much easier. It's a lot less stressful to just do the right thing. And if you just do the right thing every single time, you're going to be fine. Other things like I would overtrade, right? I used to take 3, 4, 5 trades a day, a couple of years ago, and I would give back profits, or maybe I took one good setup and I lost on it, not a lot of money or anything like that, but I want to try to go get that back. Find the next setup I could possibly find, maybe like a C plus setup, and I lose even more. And then I'm like, well, I shouldn't have done that. Well, I got to get the money back. Got to take another trade. Boom, lose even more. So I'm like, okay, how do I force myself to stop over trading? Well, at that time, mentally, I just couldn't do it. I couldn't force myself mentally to do that, especially in scenarios like that. So what did I do? I put my mouse across the room. I know that sounds insane, but I would literally grab my mouse and put it across the room. So there's just no way I could click buy. And that forced me to not overtrade. That's just, people say, you have to sit on your hands. Maybe do that. Sit on your hands in your chair. There's so many little tricks like that I've had to use in the past, and I love talking about because they're simple, but they're very effective. What other questions you guys have? YouTube, Twitter, y'all can ask too. We're already about halfway in, so you free guys do this once a week. Take advantage of it. There's no stupid questions at all. Yeah, my worst L was in 2021, maybe. No, it's got to be 2021. Maybe 2020. I don't know. It was 3, 4, 5 years ago. Market was falling. It was kind of more on that bear market side of things. I timed a bounce perfectly. So I got in puts after things bounced, right? I'm thinking market's going to crash. And I bought SPY puts. And I bought a lot of money. I probably bought like $10,000 worth of SPY puts. I was up 50% on that in a matter of like 2 or 3 days. So I'm up $5,000. And I wanted to see a new low on SPY. I didn't get it. SPY bounce. I'm like, okay, well, I mean, I'm up. I got a cushion, whatever. And then like the next day, it like shot all the way up and I was break even. Like, what am I doing? Now, and then I went red on the trade. Then it started bouncing even more. And then I added in more to that trade, added in more. I ended up being like an $8,000 loss or $9,000 loss. That stung so much. Not only because I lost that much, but I also was up 5,000. That was about a $15,000 swing from being up 5 to down almost 10. So that was one of my worst trades. And it was simply just from greed. I should have scaled out. I should have done something about it, but that'll stick with me forever. But you got to go through times like that to get good at this. And it's going to happen to all of you guys. Just you need to accept that. You're going to take some really tough losses in your career, but you can always get back out of it. It's going to make you a better trader at the end. I mean, I know that back at the firm that I worked at, one of the guys who, I mean, he'll make consistently $50 million a year. One year he got in a really, really bad situation, and there was kind of like some, I don't want to say legal, but I don't know. Like there's so many strategic ways that these big firms can trade, where they're leveraging shares from like Goldman Sachs and just stuff like that. And he was under the impression that he could use a amount of shares for collateral and blah blah blah. There's a lot of stuff that goes into it. He lost $100 million in 2 days, and it took him 2.5 years to come back from that. Maybe 3 years. Obviously, he's a huge trader, but my $10,000 loss is a lot different than $100 million. So, you can always put it into perspective. Let's see here. How do you pick your option price and date? So I always trade same week expiration, just because I'm scalping. I'm in and out in a few minutes, so I don't need to go further out expiration. That one, that's gotta hurt. But let's see, what was I going back to? And then I look for high volume and high open interest. What do you use to trade again? So I buy and sell on Interactive Brokers Trader Workstation. And the charts that you're seeing right now, I still use Thinkorswim for my charts. Do you trade account under your personal, or do you have an LLC business where there are tax benefits? I don't personally trade under an LLC, but that's something that I may do in the near future. I think that there's benefits to it for sure. But, it all depends with, like what you're expensing and stuff like that. Yeah, Scott, it's all like the mental side, and that's the hardest thing. Yeah, right. I mean, Fulcrum, it's all about the loss, right? There's guys that, like I just talked about, those guys losing 100 million. It's all relative to how big you are in this space, but it's the mental thing that hurts anyone. I mean, someone who has $1,000 to their name, if they lose $900 of it, I mean, that's devastating. How do you balance trading in school? Well, I definitely feel like I put trading over school, but I've forever made sure that my classes are after 10 a.m. my time. So I have at least the opening hour to trade. So I can get up early in the morning, kind of like get things ready. And then yeah, so I'm done trading by class time. Yeah. I may miss like power hour and I may miss stuff like that. But if I'm in class, but I know that like my trading style, it's like I need that first hour. So there we go. Yeah, I mean, obviously school sucks, but I'm done here in in like 2 or 3 months. So if y'all don't know, Miles right here is my brother, and he's about 30 feet away from me. What's some advice you would give me? Also, what was your thought process when you had your first screen? Yeah, just I mean, I hope that you're journaling stuff down and you are seeing what you're doing differently. I mean, knowing you like to take crazy swing trades and hold things overnight, and now you're sticking to a lot more day trading stuff and in and out quickly, and you're green. So I would just say stick to the day trades. Don't swing, big positions overnight. Don't average down anymore. Stuff like that. And you've seen success with it. I was just talking earlier. I used to trade 10 different ways. And once I started cutting out ways where I just consistently lost money and I stuck to the one or two ways that I make money, well, it's a very easy fix. What else you guys got for me? Miles, you should change your name in here to Miles, Ethan's brother, like Wyatt. I do average up, yeah. Obviously, if I can get a scenario where I can. This morning, on Amazon, I was just about to pull the trigger on it, averaging into it. But let's say that I have 5 contracts. I will never add more than what I was in. So, I may grab 1, 2, 3 contracts at a time and get up to, I don't know, 4, 5, 6 contracts. And then, I may buy another 3 or something, because if I'm in 3 and I buy another 10, well, those 3 that I had a really good entry on are going to get pulled down so far to where I just bought the rest. And, obviously, if that trade doesn't work, then you're over leveraged and it's going to go against you. So, a lot of the times I'll just double down. If I'm in 5, I'll buy 5. Just to kind of be in 10 right before the break. And I'm talking like right before that break. I'll never add after the break has happened. But, especially if I'm, you know, kind of with starter positions and stuff like that, try to build up a nice position, and then I'll add, I'll kind of just double down that right before the break. So it'll never pull my average too far close to where I just got in, if that makes sense. It's a good question, though. Mentally, what's the stop loss? I mean, obviously, I don't want to let something go 25% against me, but a lot of my stop loss, if I'm taking a downside trade, obviously the stock's going to be under VWAP. So a lot of the times I'll use VWAP or, the prior 5-minute candles high as a stop loss. Obviously if we're like further away from VWAP, then, sometimes it's kind of percentage based. Sometimes it's just kind of what the price is telling me. But I always know with like what size I'm in, how much I'm willing to risk. right? And I also know like on a Friday, right? Like on a Monday, contract's going to be a little bit more expensive. So I may quantity wise be buying less, but money wise, it's going to be, it could still be a decent amount. But on a Friday, I know that contracts aren't going to move just a little 10%, 15% against me. They can move 30, 40% against me in 30 seconds. So I'll size down much smaller. So I'm not going to be as affected by a 30 or 40% move on my P&L, right? If I'm trading with $10,000 on Monday, I'm sure as hell not trading with $10,000 on Friday. I'll be trading with like $3,000 on a Friday, and I can still make the same amount of money that I made on a Monday catching a 10% trade as I am on a Friday, right? $3,000 catching a 30% trade, I'll make the same amount, if that makes sense. So, to me, I don't have like a rigid rule for a stop loss. It's more of like what I'm seeing is the price action, moving the right way. Is it moving the wrong way? So, you know, there's times where the stock just isn't moving as fast as I want it to, and I'll just sell, a quarter of my position or half of my position. Whether I'm a little red, a little green, break even, whatever it is, I'll just do that to take risk off the table because it's not doing what I wanted and my trade idea isn't working the right way. So I don't have to always hold my whole position to my stop loss. I can just take risk off so then I can either move my stop loss further away from me to kind of give it time to either make the move or go against me, or, I'm obviously uh, giving up on profits that I could make if it does go in my favor, but I'm also taking away what I could lose if it doesn't go in my favor. Because in the grand scheme of things, at that moment, if I take off half a position, well, it's already not doing what I want to do. So, what I want it to do, if that makes sense. What else you guys got? I do not own any equities, Breckle. It's probably time to start doing that, and I probably will. Um, pretty pretty soon, actually. I think the market's in a good spot. I do think we may have a little bit more room to the downside, but I do think, after the 4 years of this presidency, we should see all-time highs again. Just because bear markets have historically not lasted 4 years. So I do own some crypto, but I've just never had equities, and especially the last like 3 years, its market's just been screaming higher. So, but there's never, yeah, exactly. So this is like to me a great spot to start buying things up, and I actually need to put that on my to-do list. I know it's time. It's time to start doing it. How do you decide which strike to get? Do you get a strike at your profit level, or do you buy the strike in the money? I typically go just a little bit outside of the money. So like if Tesla's at 255 and I want to see it break 250, I'll buy a 250 put. Okay, if that makes sense. If Tesla's at 255 and I want to see it break 260, I'll buy a 260 call. If the 260 call or the 250 put is just too expensive and I don't want to pay that much, well, I would just go a little bit further out of the money. So I would go 265 call or 245 put. You know what I mean? So I never buy in the money contracts because I want to see the premium flip, especially if I can get the stock to go from out of the money to in the money. That's there's a premium flip there. So I pick up a little extra on the premium, so I make a little bit more money. So like today, when I bought the 190 puts on Amazon, they flipped maybe an extra 15 cents just for going from out of the money to in the money. And 15 cents on 10 contracts, $150. Tesla getting its profit. I did not see that today. Yeah, I mean, I think anywhere down here, I mean, like look across the board. I'm probably gonna take like I don't know, 10 or 15,000 bucks. I mean, I don't know. I don't want to start with like a crazy amount, but look at Amazon. Look at Tesla. I mean, Tesla's way down. To me, Tesla's one I'll probably put a little bit more into. Meta's way down. I would like to invest in that. Apple, I probably won't touch Apple, even though it's slow and steady. It's just to me, it's not a very exciting company anymore. But it's not going anywhere. Google as well could be interesting. I mean, this is down almost 25% from its highs. But to me, I think this is an unbelievable overreaction on Tesla. So I'll probably put a bigger chunk into this, especially right here. If we get a new low on Tesla, it's time. I'm actually going to do this right here. Look at this. Buy equities under 220. Meta's probably almost time. Probably do this by the end of the week. I think. Buy equities. Tesla, Meta. I think Google will do pretty good as well. Let me look at Microsoft here. Microsoft's just a expensive stock price. Oh yeah, Nvidia too. How am I forgetting about that? I thought we would see. To me, I was like, I had this thought like under 110, you got to be buying Nvidia, and I just didn't. It was there for 2 days. I didn't do it, but I do think Nvidia, down here, buy equities 110. So I now have some notes there for me. Speaking of crypto, do you have Doge? I got back into one. Newbie. I do not have Doge. No, I didn't really have a ton of interest in Doge. I do think there may be in guys. I don't want you to think that I'm going to buy everything in one batch. I'm gonna buy like in quarters. If I want to put $2,500 into Nvidia, I'm gonna chop it up into kind of 4 different buys, right? I'm not gonna do everything at once. It's called dollar cost averaging. I do not trade any sort of spreads. I never have either. I only buy puts and calls just naked. But we have a coach for that, Hatim. If you are interested in that, he specifically does that, and he's very very good at it. His name is Swinging Bull. Would you like me to put you in touch with him? Okay, I got you. Add me as a friend real quick, Hatim, and then I'm going to add you to a group chat with Swinging Bull. I just added you as a friend, so you got to accept it. Any other questions, guys? We got about 10 minutes left here. Yeah, Duco loves the spreads. Let's see here. Add friends. Well, how do I not have Bull as a friend on here? It's pretty crazy. It's insane. 1 second. Yeah, go for it. Let's see here. Bull. And I am going to add. In second. Yeah, I'll get you set up with that team. Yeah, let's see. Why do you risk it? Yeah, no, I know. I mean, it's just I know that I'm going to, especially getting out of college, Breckle just having money saved up. I don't know. It makes no sense not to have some sort of like passive like investment portfolio at this point. And I've honestly been waiting a long time for some sort of real pullback. And now that we talk about it, I'm like, what am I doing? Why am I not like starting to get involved? Like this is what I've been waiting for a long time, like an actual pullback to take advantage of. So yeah, no, I agree. I agree. And what more can I ask for than 25% dips on these mega cap tech stocks that I'm waiting to buy. Let's see what else. Do you like Thinkorswim or trading, or have you used it like that? Yeah, so I used to use Thinkorswim for trading for like 2 or 3 years. Um, I wanted some extra tools, and that's what I'm just paying for them on a different platform. But there's absolutely no reason to not trade on Thinkorswim. I think it's a great platform. I always advocate it to new traders, and I highly recommend it. I think it's great. It's going to be a little overwhelming to a new trader just because there's so many tools on it, but I'm pretty sure I have a video of me going over how I have mine set up. But I'm always happy to help you, KSI, kind of just like with the basics of it. It's very, very easy. I've used it for so long. I know it better than some people in my life. So. But yeah. All right. Well, we're in our last like 5 minutes here, guys. So, any other questions, throw them at me. If not, and you think of one later on, you can always DM me, or you can always just at Ethan in the chat, and I will get to you. But yeah, this is we're kind of wrapping things up here. I think I'm going to be watching just for more downside tomorrow. Going to be watching Tesla. Going to be watching probably Amazon again, and I also want to watch Baidu and Baba to the upside. Does Wyatt always share with you? Yeah, he does. He does. He joins these calls, and when he is not, when it's a premium stream, he's FaceTiming me. Yeah, yeah, I know. I need to look up some stuff on that Latvian. Didn't they come out today? That's gonna be. I hope they're exciting and not super boring. Trump got the JFK files. There's like 38,000 pages or something crazy. I honestly think we could see more downside tomorrow, but with FOMC, I do want to be a little careful. So we could see a bounce, or we could see the market just make another smashing new low. So yeah, who knows? Who knows, Breckle? They made a website for it. I think the most interesting news recently was the auto pen thing that Trump was saying. Voiding all of those pardons that Biden did. He also took away the Secret Service for Hunter. That's pretty hardcore, but he almost got shot in the head. So I'd be a little mad too. Yeah, and KSI, you could also just you could also just paper trade on it for a little while to try to get used to it. You're still holding one Amazon put, Trev? Oh no. Well, it may come back down. I'll be looking for that back to 190. Why did you cut it back at break even? It's still, I mean, it's to me, it still looks good to come down, but that doesn't mean it has to, you know. Yeah, best of luck, my friend. All right. Well, I think that's going to be it for me, guys. Thank you as always for being here. It's always fun. Hope y'all enjoyed it. Again, if you have other questions, you know where to find me. And I hope y'all have a great rest of your night. And I hope to see you. I'm not live trading tomorrow, but I will be live trading for free on Thursday and also live trading on Friday. So if you're ever interested in coaching or premium, please DM me. I will get you set up. And yeah, I'll see you then. Oh man, Breckle, I don't know. I've never done the lottery like that. Yeah, that's ChatGPT. All right, guys, have a good night. Later.